Okay, so your audit report is out there. You're basically done. There's a few more things still left, right? We've already talked about subsequently discovered facts. We'll talk about omitted procedures, communication, and management letters. So it is certainly possible that after you've issued your audit report and said everything's fine, you realize, oh my goodness, we did not do this procedure. We did not observe inventory. Oh my gosh, we forgot to mail out these confirmation letters, right? Something happens. And remember, if you're auditing the same client every year, you have the chance to see that, oh my gosh, last year, look at this file, last year we forgot to do this, right? So it's like 5 months down the road and now you're auditing them again for the next year. Oh my gosh, last year we forgot to do X. It can happen. Or PCAOB comes in and you're going through the file to get it ready to give to PCAOB for them to do a review, and you go, oh my gosh, we omitted Y. Well, you can still do them, right? If it matters. I mean, maybe it's not material, maybe it doesn't matter. If it does matter, then do them. Or maybe do some alternate procedure that will let you get to the same idea. If everything's fine, you don't have to do anything. You don't even have to tell people you omitted procedures. As long as you do them and you check them and it's like, oh, okay, we omitted that procedure, we went back and did it and everything's okay. So it's okay, everything's still okay. All right, it's like nothing happened. Now, if you go back and you do an omitted procedure and it's like, oh my goodness, these financial statements are no longer fairly presented, now you have to obviously inform people. As the auditor, you are required to talk to the individuals charged with governance. So typically in a public company, we're going to call that the audit committee, although you certainly may address the entire board, and probably the CEO and CFO would be there, but you have to communicate under law, Sarbanes-Oxley, you have to go to the audit committee and tell them all of this stuff. Tell them what you've done, what was your scope, what was your judgment. Did you have any difficulties? Did they give you a hard time about going to this one warehouse or something? Are there any uncorrected misstatements? Any, even not material. Did you have any disagreements with management? You said that should be an operating lease. They said no, it's a capital lease. Or it'd probably be the opposite. You say it's a capital, they say it's operating. Are there material corrected misstatements, right? Because that can indicate there's a control weakness if they had material misstatements. And yes, they went back and corrected them, but what was that about? Did you get the representations? Did management consult other auditors? Anything significant? Was there any, did you think there were any unusual transactions? What did you find about those? Just anything you want to talk to them. And that would be your obligation to tell the audit committee kind of how the audit went, because they're the ones that are in charge of governance. They're the ones in charge of keeping auditors independent and making sure management gives auditors what they need. So the last thing you might do as part of an audit is write what's called a management letter. And this is not really part of the audit. But frequently, right, they're your clients. You're there to help them. So it could be that while you were on this audit, you saw something that is not best practice. Like, oh, at other firms we audit, we see them doing this. You might want to try this. Or, gee, we noticed this weakness. It's not material, but we don't have to report it. But still, you might want to fix it. Here's a way you might fix it. Things like that. Just we had our tax people go over these, and they noticed this tax break you aren't taking. Something like that. So it's just whatever. You're trying to keep it. You're trying to like provide customer service, I guess I'd say. It's more than it's not really related to the audit. It's more related to keeping them as a client and being helpful. management. They call it a management letter. And this is a nice summary of the kind of communications you might have, right? So all through the audit, we're now at the end of our audit. In the next chapter, we're going to learn about preparing the audit report because we're like done. We started with an engagement letter, right? That's how we agreed for what we're going to do. The clients sent you an acceptance letter. It's just the signed copy of the engagement letter. We might have sent some attorney letters out to lawyers to ask about contingent liabilities. The clients gave us what we call written representations. In other words, we promise that we've given you all the information, that we're responsible for the financial statements. As auditors, if we found internal control deficiencies, we communicated those to the audit committee. And anything else that came up about the audit, we gave that to the audit committee. And management letter, just like, here's some helpful things. Might be useful to you. While we were on our audit, we noticed this. You might want to try this. And of course, these last two, your communications, just through general having discussion, can be written or just you have a conversation. And that's it. Now you're done with your audit. In Chapter 12, we're going to learn about writing a report.